the Internal Revenue Service, legal status, authority, and constitutional analysis. 1. The IRS as a private foreign corporation. The Internal Revenue Service, IRS, was incorporated in Delaware in 1933 and operates under international treaties, specifically Public Law 94-564 and Reorganization Plan 26. Acting as an agent for the International Monetary Fund and the International Bank for Reconstruction and Development, the IRS functions under the Foreign Agents Registration Act of 1938. The Federal Reserve, as the foreign principal, is privately owned by 12 families and is not a government agency. 2. International control and foreign agency status. IRS operations are directed by foreign-controlled organizations including the United Nations Division of Human Resources and Interpol, soliciting and collecting private data on American citizens without consent. The IRS acts outside domestic jurisdiction, lacking proper foreign agents registration, and violating Article 2, Section 7 of the United Nations Charter prohibiting intervention in domestic matters. 3. IRS funding, debt structure, and the Federal Reserve. Revenue collected by the IRS is primarily used to service the interest on debts owed to the Federal Reserve, not to fund public services. Federal Reserve notes represent debt instruments, not actual money. Executive Order 11110 issued by President Kennedy aimed to bypass the Federal Reserve by issuing U.S. notes. Following Kennedy's assassination, this order was suspended by President Johnson. 4. The legal character of Federal Reserve notes. Federal Reserve notes are promises to pay, not payment itself. Unlike silver certificates, they represent debt rather than tangible value. Property purchased with these notes can be seized without due process because the underlying money was never owned. This debt-driven structure ensures a perpetually unpayable national deficit and endangers private property ownership. 5. The constitutional crisis, private banks and public slavery. Thomas Jefferson warned that private banks controlling currency issuance would ultimately dispossess citizens. The IRS acts on the presumption of foundational agreements with citizens, exploiting ignorance and structuring itself to prevent disclosure by compartmentalizing operations to avoid whistleblowing among its employees. 6. The false legal foundations of IRS collections. Title 26 CFR lacks collection authority. True collection authority resides in Title 27 CFR, covering alcohol, tobacco, and firearms. IRS agents operate under color of law, often using false identities and unauthorized documents such as Form 1040 and Notice of Levy, committing mail fraud and false representation to collect funds under fraudulent pretenses. 7. Constitutional violations and privacy rights. The IRS unlawfully compels disclosures of private information in violation of the Fourth and Fifth Amendments. Citizens have the lawful right to rebut and correct informational documents like W-2s and 1099s, asserting their status as private sector citizens not engaged in federally connected employment, contrary to IRS presumptions. 8. The income tax structure and misinterpretation of law. The income tax is an indirect excise tax applied only to federally connected activities. Income is a legal term of art, not commonly understood wages. Courts, including Sims v. Ahrens and Peck v. Lowe, have affirmed that the 16th Amendment conferred no new taxation powers and that earnings from common occupations cannot be taxed without apportionment. 9. Statutory definitions and employment misclassification. Under federal law, an employee for income tax purposes is defined as one working for the United States government, a state, or a federal corporation. Private sector workers are wrongly classified under statutory schemes, and their earnings are improperly treated as taxable income through deceptive statutory language manipulation. 10. Misuse of withholding and invalid information returns. Withholding applies to federal employees and officers, not private citizens. False information returns, including W-2s and 1099s, generate presumed liabilities unless rebutted. Credible evidence such as a sworn affidavit can shift the burden of proof onto the IRS, exposing the fraudulent nature of the tax system. 11. The nature of IRS fraud and constitutional remedies. Title 26 of the U.S. Code is not positive law but merely prima facie evidence of law. Direct taxes must still be apportioned under Article I of the Constitution. The 16th Amendment did not eliminate this requirement. IRS operations involve unlawful presumption, extortion, and misapplication of revenue laws against uninformed citizens. 12. Conclusion: Sovereignty versus financial enslavement. The IRS is a foreign-operated, fraudulently empowered organization operating outside constitutional boundaries. Its existence and conduct represent an assault on American sovereignty, property rights, and the dignity of free citizens. Understanding the true legal framework and exercising constitutional protections is imperative for reclaiming lawful rights and resisting unlawful usurpation.